morning, you look at Albemarle, Lithium Americas, and Leavent Corp, and their stocks are down between 44% and 52% from their all-time highs over the past year and a half. Investors have to be wondering what's going on with the lithium market right now. I'm Jason Hall. This is The Smattering. I got Tyler Crow here with me. Tyler is an expert in the lithium market and with these materials companies. Hey, Tyler, how's it going?
I'm doing pretty good, Jason. It's a fascinating topic, and like I was just saying before we got on, really feels like cognitive dissonance, I think, for investors that are really looking to lithium for the future.
Yeah, because you think about lithium and this can't be the peak. There has to be more demand. Why are the stocks down so much? We're gonna get into that. We're gonna talk about what's going on and help you figure out, is now the time to maybe think about buying or maybe moving on. But before we do that, just a reminder, the Motley Fool sponsors our videos. If you're looking for even more great stock ideas than what we're going to talk about here, please go to our special link, fool.com/the smattering. The Motley Fool's got its 10 best stocks to buy right now. They're going to give that to you. Check out our special link after this video. Let's talk about lithium, the lithium market, and what's going on. What's the short version of what the lithium market is and what's going on right now?
So, well, like I said, cognitive dissonance, because if you read any headline when it comes to lithium demand, everything basically says lithium production needs to 2x, 3x, 5x. I think the most recent one was the CEO of Rio Tinto, one of the largest diversified mining companies in the world, recently just said a couple days ago that lithium demand is going to rise 10x by 2030 from the 2020 levels. So monster demand. And when you hear things like that, especially in commodities where it takes a long time to develop a mine, you think prices are going to go through the roof, demand's going to go through the roof. These companies that are involved in lithium are going to do spectacularly well, right? Sometimes you can have secular trends in cyclical markets. And lithium is a cyclical market as much as we want to say all the things that are in the long-term focus, right? This year particularly, the story that has been the reason we've seen so much kind of decline in stocks is because the price of lithium has gone down significantly, and it's tied largely to basically Chinese demand. Here was a little like snapshot of what we're talking about. This is from Fast Markets. It's a commodities tracker website. It said in the first 8 months of 2023, China produced a total of 418 gigawatt hours of power batteries, so lithium ion batteries, or using lithium, right? But only 219 gigawatt hours was actually installed. So there was basically almost a 45 to 50% like oversupply capacity.
It's excess inventory is
Excess
really what we're
inventory,
talking
exactly. The Chinese economy demand is slowing a bit. A lot of the subsidies that were in place for EV demand in China have been phased out. And so when you have all this excess production, obviously people aren't going to be signing these big, hefty long-term contracts for lithium for supplies or anything like that. They were even mentioning a lot of it is just buying on spot when they need it, because they're trying to wind down production and clear a lot of this inventory. And that's where we get to the challenge here of investing in these sort of in these sort of companies like Albemarle, Livent, or anything like that, because you have to be able to spot the long-term trend while also acknowledging that these short-term changes in prices and short-term demand because of mega powerhouse producers like China are going to wax and wane over time. Prices for these sort of stocks are going to absolutely whipsaw from up and down at any given moment. Sometimes it strains your neck. They can change so quickly.
Tyler, I think tell me, I think it's fair to describe them. You think about these mining companies, the number one thing that's probably going to move their stock in the short term is the price of the commodity. To a certain extent, they're going to try to lock in long-term contracts, and they're going to try and use options and things like that so they can get at least like a fixed price that's profitable for them for some bulk of their output. But they're not going to be able to do it for all of it. And they're going to be selling some at the spot market, which is great when prices are high, right? It's ultra profitable. When prices fall, it affects their bottom line because they're selling that excess that's not inside anything that they have under contract at spots that can be low. So you ride that, right? So they're almost like an option on the price of lithium, but they're also going to be heavily levered by a lot of what's going on in the popular the animal spirits, right? When EVs are the big thing or battery stocks are the big thing, that's another thing that's going to affect these stocks as well. So that's can very much affect kind of the whipsaw effect that we see with these stocks. And in this short term, investors have to be hyper aware of that reality that can move these stocks for seemingly no reason whatsoever.
Yeah, and if one were to say be more opportunistic in these sort of markets, you do want to invest when the market looks miserable. Because even if, for example, we were to use that example from the Rio Tinto CEO, demand 10x from 2020 levels, there is clearly a secular trend towards more. That means these companies are going to be developing mines, they're going to be acquiring mines, they're going to be finding ways to basically increase output, and hopefully at prices that are economical to actually produce them. As that happens, earnings are going to increase, cash flows are going to increase. The things that we expect businesses to do are going to happen, but you just have to deal with these huge declines in prices or increases in prices at any given time. And those people being opportunistic may want to look at these cheaper times when lithium prices are really low and that sentiment in the market looks awful as better opportunities of buying rather than waiting for the hype cycle of, oh my God, lithium is at 600,000 won per ton. This is the time that we need to get in and get greedy, right? No, that's the opposite when it comes to commodities.
So maybe when we're seeing the CEOs of these companies on maybe a popular show on CNBC or something like that, or more people are talking about it at work around the virtual or real water cooler, that's maybe at the peak of the hype cycle. And thinking about it, kind of Charlie Munger inverting that inversion principle, maybe right now is one of the periods you're talking about. The lithium prices are down. There's issues in China with the weakness in the cycle. And this, again, the stock prices are down. So Albemarle from its roughly 18-month high down 44%. Livent down 44.6%. Lithium America is down 51.6%. So are you saying right now, if you're interested in looking at lithium stocks, now is the time you should be thinking about buying?
Certainly it's priced more attractively than normal. Albemarle right now, forward price to earnings estimate of 8.8 times. That's really baking in a long-term lull in prices. And I don't know if that's going to happen or not. Maybe, but if like we said, if we really think demand is going to be as strong as it is, that seems like a much more attractive entry point than what we've seen over the past year or so.